Okay, so let's start solving the depreciation methods, and the first in line would be the straight line method. So this straight line method, from the word itself meaning straight line, so it's like we have a linear regression line, something like that. So let's derive the formula from the fact that we do have the straight line concept. So that is like y is equal to mx plus b. So from this, ano ba yung ating y? So the y is actually your book value. So it's like the book value sub k. So this k depends on the time of the year. So itong k na to, that would also be your x. So this is the slope. So that's m, and then you could say that this is k, and then plus the book value when you have, of course, your time 0. So it's the initial amount. Now, if we have this BV sub 0, we could replace that in terms of B. So that is typically your initial or the cost basis. Now, looking at this equation, we could say that if we set our K that is equal to the useful life of this laser surgical tool, then therefore the BV sub N is actually the salvage value. So that becomes SV at the N period, and this slope will be multiplied to the useful life plus the book value. Therefore, the slope of our equation can be represented in terms of the salvage value minus its initial cost, or the cost basis, divided by your n. So this is the slope of the line. And then if we want to substitute this back to your original equation, then your equation becomes BV sub k, that is equal to your SV, the salvage value, minus the cost basis divided by the number of years plus the cost basis. So you can use this formula to determine our book value at any year. Okay, and this is the something like the shortened form of our equation, but this b minus the asterisk k literally means that you have your b, and then you subtract this certain expression wherein this is just the negative of this slope. Okay, and then of course I forgot to write k here. Okay, so that completes our equation, and let's try solving for the book value of the third and the fourth year. So BV sub 3, that is equal to the salvage value. So what is the salvage value at the nth year? So that's 20,000. And then we subtract the cost basis, that's 200,000. And we divide this by the number of years. So the depreciable life is 5 years. So that is 5, and then we multiply this by k. In this case, your k is 3, and then you add the cost basis, so that's 200,000. Therefore, your book value, this results to 92,000. And then doing the same concept to your book value at the fifth year, so the book value of the fifth year would be equal to 56,000. That should be in dollars, since these are all in dollars. Okay, so that is how easy it is to compute for the book values using our straight line method. Now, imagine this being a straight line, so you can actually use your calculator to solve for this. So for example, we'll be utilizing your calculator, and then let's just go to the statistics and then the a plus bx. So that's literally your linear regression function. So you could just type in here the initial. So initially we have the 0 time. So ito yung simula ng ating period that we're talking to, and then magkano ba yung cost initially? So that's 200,000. So at 0, that's 200,000. So it's like the 0-year period. And then after some n period, diba, we have 5 years. So after 5 years, we could say that it was reduced to 20,000. Okay, so therefore, what could be the value after this 3 and 4 years? So you could just go to statistics again. So press shift 1, and then press 5 regression, and then press since we need the y values here, so just press 5, and then what could be the value at the third year? So you could just press 3, and then it should give you the answer, 92,000. How about for the fourth year? So that is just 56,000. And of course, after the at the end of its useful life on the fifth year, that becomes BV sub 5. So that is equal to 20,000. Now, if you'd be asked what is the depreciable cumulative depreciation in this case, so you could just take the difference between these two values, and that should give you the depreciated amount. So for example, we have the book value that's 92,000 in the third year. So you could just say that the depreciated amount would be 200,000 minus 92,000. Okay, so that amounts to $108,000, and that is your depreciated amount. Okay, so that's it for the straight line method. I hope madali ito sa inyo kasi these are just a very easy concept of the straight line. That we use a regression, you can use the calculator, anything that you like. And remember, we also tackled this in advanced mathematics if you already know. So this is not this will be very easy for you. Now let's head to the next, which is all about the declining balance method. Now, unlike the concept of the straight line method, we will be utilizing this specific depreciation ratio, or the ratio of the depreciation, and that is represented by R. So as you can see from the equation, before we do have this kind of straight line equation, but now something like this is in the power form, kasi that is the cost base is multiplied by 1 minus the ratio of depreciation raised to k, that's the period, and then that will give the book value. So if you'd be reading this again, you'll try to read this. The ratio of the depreciation in 1 year to the book value at the beginning of the year is constant throughout the life of the asset and is designated by, so the R, or the ratio, could be greater than 0 but less than or equal to 1. And in this method, we could use R is equal to 2 over N when at 200% declining balance is being used, so twice the straight line rate of 1 over N. And N is equal to the depreciable useful life of an asset. So if the declining balance is 150%, so we could say that that's 1.5 over N. So it's like yung percentage, divide mo ngayon sa 100 kasi that's in percentage, and then just divide it by the number of the useful year. So for example, a new electric saw for cutting small pieces of lumber in a furniture manufacturing plant has a cost basis of 4,000, so that's your B, and a 10-year depreciable life, so that's your N. The estimated SV, or the salvage life value of the saw, is 0 at the end of 10 years, so that's typically 0 at SV sub 10. So use the DB method to calculate the annual depreciation amounts when. Now there is something wrong with this problem kasi hindi na specify dito what is that certain end of the period. So I'll be revising the last sentence. So use the declining balance method to determine the book value at the end of 6th year using this A and B. So this is supposed to be the question in that case, and let's try solving for the book value at the end of the 6th year. So that is the book value at the 6th year, that is the cost basis, that's 4,000, and then we multiply this by 1 minus the ratio of depreciation, so that is 200% declining balance, that's 2 divided by N, that's 10, and then we raise this to 6. So therefore the book value at the 6th year, $1,048.576. Okay, and then what about, actually wala palang dollars, so kasi hindi naman in-specify. So just assume na this is actually peso or pesos kasi hindi sinabi, but of course if it's in dollars, then we assume that the value is in dollars. Now what if we try to compute for the book value at the end of 6th year, but we will be using the 150% declining balance method? So that's the same concept, 4,000 times 1 minus 1.5 divided by 10, and then raised to 6. So this is the book value at the end of the 6th year. So that's 1508.5981. Okay, so in terms of pesos, kasi hindi naman sinabi. So that is how easy it is for the declining balance method. So mapansin nyo, depreciation is not really difficult. So a straight line and then declining balance, you just have to remember the formula. Now I want you to answer this question by just mere mental solving, no? So what is the expression when you have to determine the book value at the end of the 3rd year when your when you have this certain ratio that is 120%, a double, yes, the declining balance, using declining balance method. So I want you to think about it, and your answer, if you want to pause the video, then you might want to pause it to just think about it, but your answer should be something like this. That's BV sub 3, that is equal to 4,000 times 1 minus 1.2 over 10 raised to 3. Okay, so if you were able to think about this expression, then you should be able to understand already this DB method. Okay, and now we can now proceed to the next one. So we only have 4 of this, and we'll try to discuss all of it in this video. So the third one is the sinking fund method. Remember, this sinking fund was already introduced to you when we were talking about this equivalent worth, I think, and that is actually the reciprocal of your uniform series future worth factor. So the sinking fund method is it says here that that's the annual depreciation obtained from the difference in the cost basis and the salvage value multiplied by the sinking fund factor. Now, as you can see from the formula, you are given by the annual depreciation as well as the total or the cumulative depreciation for K years. So if you just want to determine the certain annual depreciation, let's say for the N year, this is your formula. But how about if you want to determine the cumulative depreciation for that? So you just have to multiply each annual depreciation and then just multiply it with your something like the uniform series factor, so that you can determine the total depreciation after K years. And then remember, your book value would be the difference between this cost basis and then this total depreciation for K years. So if you're asked to determine the book value, then you have to something like perform that operation. Now for our next example, we have a certain office equipment has a first cost, so that's your cost basis, 20,000, and has a salvage value of 1,000 at the end of 10 years. Determine the depreciation at the end of the 6th year using the sinking fund method at 3% interest. So this 3% interest is very important because we will not be able to answer it if you don't have this interest. Okay, so for this case, we need to determine the depreciation at the end of the 6th year. So this is kapag nakaka-encounter kayo ng gantong construction ng problem, determine the depreciation at the end of the 6th year. So we would be assuming that this is the total depreciation for that K years and not the annual depreciation. So in this case, we just have to determine yung ating D sub K, and then we need to find this D asterisk K. So parang ano lang to, parang nakamultiply lang. So if you want to directly solve for your D, parang D asterisk K, you could just take this and then multiply this to your expression. Parang ganun lang naman yan. But then again, let's try first solving for our annual depreciation. So in this case, your D sub K would be equal to your B minus SB. So that's the cost basis minus your salvage value. Okay, and then we multiply this by the sinking fund factor. So that's 0.03 divided by 1.03 raised to 10 minus 1. And this gives us a value of our annual depreciation that is equal to 1657.3796 pesos. Okay, and then we will be using this to determine our D asterisk K, which is the total depreciation that is cumulative for the 6th year period, after the 6th year period. So it's like D asterisk sub 6, that is equal to your D sub K, so that's 1657.3796. We multiply this by the uniform series future worth factors, that's 1 plus 0.03 raised to K, that is 6 minus 1 divided by 0.03. Okay, and this results to your answer that is equal to 10,720.6108 pesos. Okay, so hopefully malinaw yun. It's just that we just need to compute for your total depreciation from the 0 or from the first year to your Kth year. And then if you were asked to determine the book value after this 6th year period, so what you have to do is to subtract this statistics from your book value. So that's means the cost basis. So that's B minus D asterisk 6. So this should give you the book value at the end of the 6th year. So ganun lang naman siya, subtract lang. So hopefully ay nag-guess nyo to. when we're using the sinking fund factor. So technically, what you just have to do here is to determine the annual depreciation and then multiply yung ating factor for the uniform series using the kth period. Okay? And then just subtract for the book value. Okay, and then lastly, we could use the sum of the years digit or the SOYD method. So, ano ba pinagkaiba nito from our previous examples? So, for this method, the cumulative years are regarded as n. So, hindi to porket sinabi natin na we have 10 years. So, it doesn't mean that your n is 10. What it means is that you have to take the sum of all these digits of this starting from 1 to 10, and then that should be your n. For example, let's say the useful life is 10 years. So therefore, your n would be equal to 1 plus 2 plus 3 plus 4 up until plus 10. What if your useful life, or let's say useful period, is 50 years? So that's 1 plus 2 plus 3 up until 50. Okay, so that means that this is your n. Now, if you want to use your calculator to determine this, it can be expressed in terms of the summation. Okay, just use this. Now, you can have here as your x, and then you start with your I that is equal to 1, and then you end up with the last digit, so that's your n. Okay, not really your capital N. Let's just use the small n to pertain to the last digit of your year or the useful period. Okay, so you can use this general formula, and then you could just easily determine the value of your n using the summation notation in your calculator. Now, after determining that, so let's try using that here in our video. So for example, I want to determine the number or the sum of the year as digit using my calculator. So you could just press shift and then press X here. So X would be equal to 1 starting from 1 and end up with 10. So this should give me the answer that is 55. So therefore, that is the sum of the year's digit, and that your n would be equal to 55. Now after that, for the first depreciation, where k is equal to 1, k sub n is equal to 10. So this is what comes as a tricky part here. When k is equal to 1, so that means parang first year mo siya, your k sub n would be equal to 10. So it's like parang kabaliktaran, no? You start with 1 or the first period, pero yung k sub n mo would be the last digit of your period. So it's like the last year. So it should be noted that for a certain year k, the ratio is k sub n over n, and it's not the k itself. So parang yun nga, sinabi rin dito, and thus k sub n over n is equal to 10 over 55. For example, we use the second year, so that's k is equal to 2. Then your d2 would be b minus sv times 9 over 55. So it's like something like this, no? When you have, let's say 1 to 10, gamitin natin siya. So you could just write 1, 2, 3, 4, 5. Wait, wag dito kasi hindi kasha. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, so this is your 1 to n. And then if you're asked to find your k sub 1, what would be the ratio of your k sub n over n? So that is simply 10 over 55. What if it's the fourth year? So you could just write parang 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. So kung ano yung katapat niya dito, that would be the one that you'll be using. So if it's k, so this is your k sub n. So it's like if it's k sub 4, your k sub n would be equal to 7. Okay, so that should be a quick reminder in your solving for the sum of the years digit method, and that is just the depreciation on that certain period. So you should be able to determine the cumulative by simply adding that. So again, you can just add the values here, so the denominator would still be the same. So it's like the k sub n will be added. So if you have the first to the fourth year, so you should be adding 10, 9, 8, 7. So those are the concept that we have to remember in solving for this. Let's try solving for number 1. An equipment that costs 7,000. So let's have some label for this. This is the your B and has a useful life of 8 years. So you could just use small n just to emphasize that this is not the capital N that we'll be using. So the salvage value 8 years then. If the book value of the equipment at 4th year is 2197, so this is your BV sub 4, that is equal to 2,197.22. We need to compute for the salvage value using the sum of the years digit method. So SV is actually unknown here. So what we have to do is to determine it using your sum of the years method. So the first thing that we need to do here is to take the sum of all the digits and determine our capital N. So we could just use x is equal to 1 up to 8. So this should give us a value of 36. So your N is equal to 36. Remember, we do have this kind of formula that is d sub k, that's b minus the salvage value multiplied by k sub n over n. But this is just the depreciation at this certain period, diba? It's not the total depreciation, but we can remember from our previous discussions that if we have the cost basis, that's your B, minus the book value, that equals to the total depreciation. So that means that if I want to take all of the total depreciation for after the fourth period, that would mean that if I can just subtract this cost basis minus the book value, then that is the total depreciation. So what I'll be using is that I'll be transposing or transforming this d sub k in terms of the fourth period. Okay, so I'll be using the asterisk, which means that this is simply the cost basis, that's 7,000 minus the salvage value, and then this k sub n is actually the sum of all these k sub n that we need starting from the first year going to the fourth year. Remember, that's 1, 2, 3, 4. This your k, and then of course your k sub n would be 8, 7, 6, 5. So therefore this k sub n would be 8 plus 7 plus 6 plus 5. We divide this by 36. Okay, had this been just the depreciation in the fourth year, you could just remove all of this, and then that is for your fourth year. But and then you remove the asterisk just to indicate that that's just the annual depreciation of that fourth year. But as what I've been talking about, I'm using the total depreciation in this case, so you just have to add all the digits that are corresponding, that corresponds to your first year going to your fourth year. And then remember, what could be this value? So we could just remove this and substitute the value that is equivalent to this part, which is actually the difference between the cost basis and your book value at the fourth year. So that's just 7,000 minus 2197.22. Okay, and then you can just press shift solve to give you the salvage value that is actually equal to, this will give you 349.9970. Okay, so this is almost equal to 350.00 pesos. Okay, so that's why the answer there is 350 pesos. So remember, hindi natin ginamit itong formula na to. As you can see, the k sub n is not just 1, but 8 plus 7 plus 6 plus 5, because the book value that is given here is book value. So that typically means that if you subtract that from the cost basis, then that should give you the total depreciation, which should be used if you want to include all the k sub n that are corresponding, or that corresponds to from the first year going to your kth year. Okay, so that is how it is done when you want to analyze the depreciation, and those are all the methods that we could have in terms of the depreciation. Now, since we're already done with all this depreciation method, there is another one which we have, this modified accelerated cost recovery system, or the MACRS. But again, we have this method under the US taxes, so it is not applicable for us kasi wala tayo sa US, we're in the Philippines, na ang ating tax ay lumolobo lagi, na wala namang joke. So anyway, so hindi natin siya pwedeng gawin sa atin kasi hindi naman applicable yung mga taxes natin. So let's head into something like after tax analysis naman na tinatawag natin. So ito yung one of the important things here, kailangan nating maintindihan yung mga taxes na ano natin sa government, or yung mga taxes na binabayad natin. Saan ba napupunta yung taxes natin? Ano ba yung pinapagkuhanan? Kung ano ba yung mga certain factors na nakaka-apekto sa taxes natin? So dito natin muna siya pag-usapan. Pero nabanggit na naman natin to before Property taxes. So ito yung kapag meron kang assets or properties. For example, meron kang land, building, so equipment din. So pwede natin siyang taxan, or the government can tax that. And these are These are levied by the municipal or country or state governments. And then the sales taxes, so ito yung kapag ang base natin ay purchasing of goods or services. So, yun nga, independent din siya sa gross income or profit. So, it's like, basta kung meron kang pinapagbenta, those products are taxable. So, kaya meron tayong certain taxes. Makikita nyo dun sa ating mga products, diba? And then, we could have these excise taxes, and these are federal taxes assessed as a function of the sale of a certain good or services, often considered a non-necessity and are hence independent of the income or profit business. So usually, this is charged to the manufacturer kasi halimbawa, nagpo-provide ka ng service or certain product na hindi siya necessity, parang ganon. So, sabi nga natin, pag hindi necessity, pwede kang maka-live or maka-survive without those. So, usually, ang nagbabayad nito yung mga manufacturer nun or yung mga seller ng mga ganong certain products. So, ito yung 3 taxes natin na kailangan nating maintindihan before we do the before tax and after tax MARR. So, ito lang naman yung general idea natin. So, if you have this before tax and after tax, this should always be your relationship. The before tax MARR multiplied by 1 minus the effective income tax rate is equal to your after tax MARR. So that's just how it is done. So kung meron ka na agad effective income tax rate, multiply mo lang yun sa, or 1 minus mo lang yun, then multiply mo sa before tax MARR, that would be your after tax MARR. And then we do have this interest rate to use in after tax studies. So if you want to have this after tax, kasi diba minsan hindi natin kino-consider yung mga taxes na pinapataw. So what if we want to utilize these taxes just to determine if we could have another parang cost of the product, or probably we could make some adjustments or little adjustments dun sa ating mga costs so that we can account para hindi tayo malugi if ever malaki yung tax. So, this is the weighted average cost of the capital. So, yun. Consider na yung mga tax natin. So, that's lambda 1 minus t multiplied by I sub b plus 1 minus lambda E sub A. So, ano ba itong mga to? So, yung lambda natin is the fraction of the firm's pool of capital that is borrowed from lenders. So, example, nagkaroon ka ng certain capital, and then yung capital na yun is binarrow mo siya. So, kasi di ba minsan may mga taong mga businessman. So, yung firm, for example, meron mga share yung mga mga certain people na yon or mga taong businessman. So, yun yung parang pinul nila na fraction nung amount of parang capital natin. And then your T is the effective income tax rate. So, as decimal, so usually given to. And then your I sub B is the before tax interest paid on the borrowed capital. So, parang ito yung binabayad mong interest rate. So, ganon. So, and then yung ating E sub A is the after tax cost of equity capital. So, that should be always given the problem. So, yun. And then, to summarize, suppose a firm's WAC is 10% per year. So the after-tax MAR may be set to 15% per year to better reflect the business opportunities that are available for capital investments. And if the firm's effective income tax rate is 40%, the approximate value of the before-tax MAR is 15% over 1 minus 0.4, which is 25% per year. So that only means we can utilize this equation to determine our after-tax analysis or after-tax cost and then our before-tax cost. So, yun lang naman yung ibig sabihin. And then, again, lastly, we have this taxable income of corporations or the business firm. So, yung pwedeng taxable income lang for any corporation would be the gross income minus all expenses of the capital investment minus the depreciation deduction. So, yun lang yung pwede natin taxan. So, ito yung parang sineset sa mga ating mga companies. Though, I'm not really sure kung ito pa rin nag-a-apply sa Philippines, but consequently, we just have to use this. And remember, for any company that you have, so we're gonna i-assume natin now, your taxable income would be your gross income minus all the expenses except for capital investment, and then yung depreciation deductions. So, yun lang yung maging taxable income. So, for example, we have this first problem. A company generates 1,500,000 of gross income during its tax year and incurs operating expenses of 800,000. Property taxes on business assets amount to 48,000. The total depreciation deductions for the tax year equal to 114,000. What is the taxable income of this firm? So remember, sabi natin for taxable income, you just have to incorporate the gross income, okay, all expenses and the capital investments. So this one incurs operating expenses 800,000. Property taxes on business assets amount to 48,000. So these two are part of the expenses except our capital investment. Kasi, remember, these are operating expenses. So, syempre, kasama yun sa expenses. Property taxes, hindi naman yan capital investment kasi asset mo yan eh. So, that's 48,000. So, kasama pa rin yan. And how about this total depreciation? So, syempre, kasama rin yan. So, lahat ng mga ito is kasama. So, if you want to determine our taxable income, so that's taxable income, that's just the gross income 1.5 times 10 to the 6. We subtract 8 times 10 to the 5th minus 4.8 times 10 to the 4th. And then finally, we subtract 1.14 times 10 to the 5th. Okay, so this should give you $538,000 as your taxable income. And then, ano bang meron dito sa taxable income? So, ito yung hanapan natin ng tax. Ganun lang yun. And we can use this. Pwede natin gamitin to. We could just use yung ating saan ba yung ano dito? Ay, wala pala dito nakalagay kung ano yung pinapataw natin na tax. Kasi, hindi ko nga pala nilagay kasi iba nga pala yung atin. Kasi nasa Philippines tayo. So, ayun. So, kung ano man na pwedeng taxes na ipataw natin for our income or usually this is the income tax, diba? We call this the income tax. So, usually, meron ata dito. Ay, wala nga. So, usually, yun yung ating ipapataw dun sa ating taxable income, diba? Wala ba dito nasabi? Ay, ito pala, income tax are the function of the gross revenue minus allowed. Pero walang sinabi dyan kung ilang percent. So anyway, that's how you compute. So for example, meron kayong certain gross income and then yung expenses nyo. So ito usually sa company ito ginagawa, no? Kasi hindi naman natin pwedeng i-relate sa ating mga certain salaries, diba? Pero usually yung salaries mo, once it is given, yun na yung rate mo and then may certain income tax na lang tayo na pinapataw doon. So, yun. Tsaka kasama yun mga overtime mo, mga ganong taxes. Pero later on, you'll just understand it pag nag-work na kayo. But then again, ito naman yung importante dito eh. Pero siguro, hindi na ako maglalagay ng mga problems relating to this. But if ever, mga direct sub lang yun for such problems involving these taxes kasi they are more on parang US setting. So, ito dito na tayo sa taxable income natin. And then, we can now proceed finally with our replacement analysis on the next video. Okay?